Good day everybody and welcome to Moementum channel. In this video we're going to review two undervalued dividend stocks to buy or consider or add to your watches right now. Both of these companies are very solid dividend payers. They have very safe dividend payouts over several years, and both of them are in consumer stable sector. The first company to review is a company no other than Procter & Gamble. This company has been founded since 1837 and is headquartered in Cincinnati, Ohio. They are paying a dividend which is currently yielding at 2.52%, as you can see here on the screen, and they have a dividend safety score of 99, which is considered to be very safe according to Simple Safe Dividends. In terms of the company's volatility, they are showing a volatility score of 0.48. Anything under 1, as you might know, considers and suggests that the company is less volatile than the general stock market. In this case, 0.48 is considered to be very low volatility for this company, which is a great choice for investors, particularly looking for solid companies with dividend paying and with less volatility as expected. In terms of the market capitalization for Procter Gamble, it is a very well-established mega cap company with $338 billion in market cap. Their last trading price for the company was at $137.96, which did not show any up or down in the last trading day. Procter Gamble company provides branded consumer packaged goods to consumers in North and Latin America, Europe, the Asia Pacific, Greater China, India, the Middle East, and Africa. It operates in 5 segments, including beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. Some of their popular brands and products include products such as Head & Shoulders, Herbal Essence, Pantene, Olay, Brown, Gillette, Crest, Oral-B, Pepto-Bismol, Downy, Tide, Cascade, Dawn, Febreze, Swiffer brands, Pampers Always, and Charmin. The Procter & Gamble company, as you notice here, has been paying and increasing their dividend consecutively over the past 63 years. Dividend growth streak of 63 years uninterrupted. That's just amazing, making this company definitely among one of the dividend aristocrats. Their payment schedule, as you notice, they pay their dividends on a quarterly basis every February, May, August, and November. Their next payment date, in fact, their most recent payment date was in May 17th, with an annual payout amount for the Procter Gamble totaling $3.48 per share. Now, if you look at the company's valuation, as we indicated in this topic, we are looking at companies that are fairly considered to be undervalued according to their valuation numbers. For Procter & Gamble, their current dividend yield of 2.52% is 15% below its 5-year average that it's been sitting at 2.97%. And this is actually a very good sign in this case, because if you notice, while the stock may not be a very timely income opportunity due to relatively low yield, their current valuation is actually very reasonable. And in many cases, when you are seeing such signal, it could suggest that the Procter Gamble could be fairly priced and in fact could be well positioned to see a sizable dividend increase, and the sizable dividend increase could be around the corner. Look at their forward price to earnings ratio. So for Procter Gamble, the price to earnings ratio, which is a metric and valuation for the valuation of the stock and how expensive or cheap it is sitting at 23.9 multiple, which is close to its 5-year average of 22.2. And if you compare that price to earnings ratio to that of consumer stable sector, the 23.9 is somewhat, in line with the 23.5 multiple price to earnings for consumer stable. So suggesting that the company is kind of fairly valued as opposed to the consumer stable sector. If you look at the 52-week price range, you can see here where the last trading price sits compared to the 52-week low versus 52-week high price. And of course, you have a chart here that shows you the past 5-year forward price to earnings ratio for the company. And you'd see it's slightly higher than the 5-year average, currently their current price to earnings ratio. All right. According to TipRanks and the analysts covering the stock, we have 11 analysts covering the stock with a consensus for moderate buy, the 6th analyst having a buy rating, 4 a hold, and 1 a sell. The projected one-year price target for Procter Gamble is sitting at $147.91, which shows an upside of $7.21. In terms of the price range forecast for the next 12 months, the low of the range sits at $119, and the high range price prediction is at $168, with an average at $147.91 as indicated earlier on. Moving on, the next stock to review is a company no other than Pepsi, a ticker symbol PEP, traded on NASDAQ. Pepsi operates as a food and beverage company worldwide, and the company operates through 7 segments: Frito-Lay North America, Quaker Food North America, PepsiCo Beverage North America, Latin America, Europe, Africa, Middle East and South Asia, and Asia Pacific, Australia and New Zealand, and China region. It offers branded dips, cheese-flavored snacks, and tortillas, as well as corn, potato, and tortilla chips, cereals, rice, pasta, mixes and syrups, granola bars, grits, oatmeals, rice cakes, simply granola and side dishes, beverage concentrates, fountain syrups and finished goods, ready-to-drink tea, coffee and juices, and dairy products. The company was founded in 1898 and is headquartered in Purchase, New York. As you notice here, the company has a dividend yield currently sitting at 2.91%, which is fairly in line with its 5-year average. They are also showing a very safe dividend score here for us. As for beta or volatility measured for Pepsi, it is also considered a low volatility with a measure of 0.63. The company is also considered a mega cap, similar to Procter & Gamble's, with $203 billion in market capitalization. And their last trading price was at $147.85 US dollars. Moving on, if you look at their dividend history, PepsiCo has been paying and increasing their dividend consecutively for the past 48 years. And they also pay a quarterly dividend in the months of January, March, June, and September. So if you are interested to take advantage of the dividend payment and secure getting a dividend for the next dividend payments, June 3rd date is their ex-dividend date. If you have shares of the PepsiCo company on or before this date, you would be subject to getting that dividend on June 30th. And the annual payout dividend in total for a year is currently at $4.30. In terms of valuation for Pepsi's, their current dividend yield of 2.91 is about in line with their 5-year average of 2.90. And this suggests that the stock may be reasonably valued today. However, it is worth mentioning that Pepsi's forward price to earning ratio, which is at 23.90, is well above their own 5-year average of 21.90. Although it is in line with 23.5 consumer staples, but it is definitely well above their 5-year average. This might indicate that the stock looks somewhat expensive compared to how the market has valued it in the recent years. That's just a measure for you to consider. And this conflicting situation often arises when the stock's price rises significantly faster than its earnings. You notice here the stock is trading at actually very close to its 52-week high price. So you can check that as you notice here. And if you believe the company's long-term outlook for profitable growth has improved, then the higher valuation multiple could be then deserved. However, you might also consider to wait for some pullbacks because, as you know, those opportunities like that does happen in the stock market. And a company that grows too fast, there's a good chance for them to also have some pullbacks that you can, as a patient investor, take full advantage of. In terms of the projections for the price for 1 year, next 1 year, of the 8 analysts in tip ranks covering the stocks, 4 of them are having a buy rating and 4 of them having a hold rating, with the 1 year price prediction for PepsiCo sitting at $155.71, or showing an upside of 5.32%. The lower range of the 1 year price projection for the company is at $147, which is somewhat close to the price that the company is being traded at. And the higher range is at $165. PepsiCo is perhaps not one of the greatest growth stocks, obviously, where for both of the companies that we talked about here, PepsiCo and Procter Gamble, they're more considered to be solid dividend-paying stocks, and you are not necessarily buying them for a great upside potential, but more so for having their solid dividend income coming in every quarter, and knowing that how they've consistently increased and grown their dividends for numerous years, close between 50 to 60 years, as we saw for both of the companies. There you have it, folks. A quick review of 2 solid dividend-paying companies in the consumer staple sector that you could consider to buy or add to your watch list. definitely for the solid dividend income that they do pay. Let us know in the comment section down below whether you are invested in any of these two companies and what are your favorite dividend paying companies in the stock market right now. We'd love to hear from you, so be sure to leave us a comment down below. I hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. And of course, don't forget to subscribe to Moementum channel. Here on Moementum, we post weekly videos about stock market investing, finances, and financial freedom. Thank you, and we hope to see you next time.